Wow, so hearing this really pissed me off because it seems like even after the fastest increase in the cost of living for Canadians in recent memory, the government and the Bank of Canada are still worried that the amount that you're getting paid is going up too quickly. So today I'm going to show you why it seems like they're actively fighting to make you get paid less and how wages are being kept down by manipulation of the labor market by both the Bank of Canada and the Government of Canada. You might have heard that the numbers were posted just last week, and Canada lost 6,400 jobs last month, resulting in 5.5% unemployment. But you might be surprised to hear that in the eyes of the Bank of Canada and the government, this actually isn't that much of a bad thing. Just listen to this.
But as we see inflation come down, we do have to be careful about a wage price spiral increase where inflation starts increasing once again because costs continue to go up.
He talks about something called a wage price spiral, which is actually a pretty divisive concept. Some people think that it's a sound economic fear, and other people think that it's more of an anti-worker narrative spread to keep costs down for big businesses. Here's a little graphic I put together to really make clear to myself what a wage price spiral is. This happens when there's demand for workers or there's a labor shortage, right? Now, if there's a labor shortage, that means that many businesses are competing for the same people to work at their businesses. And as a result, they have to offer those people higher wages in order to get them to work at their company instead of a different one. Now, that results in people getting paid more or their wages increasing, right? Now, as a result of that, additional money that these people have, demand goes up for goods and services, and businesses also have higher costs because they're having to pay their employees more. The idea then is that businesses would make the decision to increase their prices because they have increased costs from paying people more money. Now, as a result, the goods and services have higher prices, and everyday Canadian workers say, hey, I actually need more money to keep up with this increasing cost of living. I need to get paid more. And in a situation where we have a labor shortage, then businesses have no other choice but to pay people more. And you can sort of see how this cycle would continue and continue. This is the idea of a wage price spiral, although some people are a little bit skeptical of it. This is also something that the Bank of Canada is especially worried about. Just listen to this statement from Tiff Macklem, who is the governor of the Bank of Canada. He said this at a press conference about 6 months ago at the height of inflation, talking about this very same thing.
An important reason we have been front-loading our interest rate increases, moving interest rates up rapidly, is to make sure we keep those inflation expectations well anchored. And that is precisely to avoid the possibility of a wage price spiral. Because once you get into a wage price spiral, it's too late. And once that happens and inflation expectations become unmoored, move above the target, then in order to get inflation back to target, we will have to send interest rates considerably higher. We will need a much more marked slowing in the economy. And by front-loading, by moving our interest rates up relatively quickly, we're sending a clear signal. We are resolute in our commitment to bring inflation down. And by keeping those inflation expectations anchored, as those international and domestic price pressures ease, inflation will come back to the 2% target.
So part of the reason the Bank of Canada has jacked up interest rates so quickly is that they want to reduce the amount of jobs available so that there's less demand for workers so that wages don't increase, which in their eyes makes it less likely that inflation will tick back up as a result of this wage price spiral. Now, obviously, these types of statements don't go over too well with everybody. The largest union in the country, Unifor, the head of Unifor, after these statements from Tiff Macklem, said, well, the governor of the Bank of Canada is essentially waging class war, saying that the workers shouldn't be getting raises that they need in order to keep up with the cost of living. But either way, the Bank of Canada can manipulate this demand side for labor, but the Government of Canada can also impact the labor market as well, except largely on the supply side. Take a look at this. Despite concerns around housing, healthcare, and seemingly with a disregard for the quality of life we're able to offer to Canadians, to new Canadians due to affordability issues, the less than 1 month old new Canadian Minister for Immigration has said that there are no plans to slow down immigration, and some analysts believe that a new higher target will be introduced by November of this year. As a reminder, Canada's targeting around 500,000 new permanent residents each year, but along with temporary workers as well as students, international students, we're starting to see the actual increase in the amount of Canadians in the country going up by about 1 million people each year, a record 1.2 million last year. When you look at it directly from the perspective of the government, setting these radically high targets in this area is only a positive. It increases your GDP by adding more consumers and workers to your economy, even if that means that the GDP per person, which is largely used as an indicator of the quality of life for the average citizen, even if that's declining while the GDP numbers are going up, it feels good for politicians. The average Canadian has a worse quality of life, but when the comes time to vote, well, they can say, hey, look how good our GDP numbers are. At the same time, they're also adding more supply into the labor market, keeping costs down for big businesses so that if you believe in this wage price spiral concept, that will prevent prolonged inflation, at least in the government's eyes. But an added benefit to the government that we haven't talked about is that by adding more workers, you're also increasing both net tax revenues that you can collect while also filling up the bottom layer of the Social Security Ponzi scheme. Now, if you don't immediately understand what I'm getting at here, that's totally okay. Let me explain this one simple thing, because as soon as you understand this, everything else is going to make a hell of a lot more sense. As an example, I want to tell you a story about the CPP, or the Canada Pension Plan. Now, back in the 1990s, there was a crisis around the CPP because due to demographic trends, largely a aging working population, largely made up of baby boomers, they realized that the Canada Pension Plan was unsustainable. The contributions from employees and employers paying into this sort of fund wouldn't be enough to cover the amount that they would need to pay out to people who were claiming CPP in the future. So in an attempt to solve this problem, the government gradually raised the amount that each person and company had to contribute from a total of 4.4% in 1990 to 9.9% in 2003, and today it totals around 11.4%, again half paid by the employer and half paid by the employee. With these higher percentages, they'd actually be making more, at least for a time, than they would need to pay out. For a number of years, this resulted in a surplus of money. They collected more than they needed to pay out, and you can see that right here between the years of 2000 and roughly 2021. But now the story is a lot different based on the amount that's coming in versus the amount that needs to go out. With an aging population, we're only projecting that we'll get more and more cash flow negative here, as you can see on this chart projecting out in 2090 that we could be $4.8 trillion in the red on this issue. But the people who manage the Canada Pension Fund aren't actually scared of this. The reason they're not worried is because they have a plan, and that plan was to create an investment fund called CPP Investments, Canada Pension Plan Investments, to invest the surplus during those green years that I showed you in financial markets, largely in 3 key areas: private investments or private equity, public equity, and real estate. And that's exactly what they did. And you can see here all of the different private equity firms that the Canada Pension Plan has partnered with. These are sort of big funds that the Canadian Pension Plan will give money to, and then those funds will then go and invest in companies that aren't yet listed on the stock market. They also do this with public equity. That's both Canadian and foreign companies that are publicly traded on the stock market. They'll invest in that, as well as about 10% of the Canada Pension Plan Investment Fund being invested in global real estate. The idea is that the growth of these investments will make up for the fact that the amount going into the CPP is less than the amount that needs to come out of it. But this only works if the global economy does really well, and as a result, CPP investments, equities, their portfolio does really well enough to sort of account for that difference in the money that's coming in versus what needs to go out over time. But what does all of this have to do with immigration numbers and the sort of the labor market? Well, this dream that the investments of the CPP will continue to cover the expenses via their growth is just one element that can save the CPP. The other two are, one, increasing the amount of money that each person and company is forced to pay into the pension plan. We've already seen this throughout the 90s to today, growing from 4.4% to 11.4%. But the second solution, apart from the growth of these investments, is a rather precarious one because it's by increasing the amount of people that pay into the fund. Now this is a potential issue, right? Because while you are increasing the amount that's getting paid in and sort of maybe evening out the amount that's going out, you're creating another problem down the road where we're going to need even more people paying into the fund to pay out for the large amounts of people that are currently paying for it. Do you see what I'm getting at here? One day, all of the working age Canadians that are being brought into the country right now in order to sort of pay for this difference, pay into the CPP, well, at some point, they're going to need to withdraw from it, at which point we're going to need even more aggressive growth in the future to pay for it. And when you think about the incentives that this and other situations related to it creates, well, the decisions of the government and government institutions start to make a lot more sense. We've already talked about how the government directly benefits from their policies, but think about the indirect benefits as well. If they keep wages down for Canadians, well, then the companies that CPP invests in also have a potential for better shareholder results, increasing the value of CPP's portfolio and making the Canada Pension Plan sustainable for longer. So if tax revenues and the sustainability of Canadian retirement funds are dependent on immigration and seemingly perpetual economic growth, well then the government and the Bank of Canada probably feel pretty handcuffed, not wanting a major social disaster in their lifetime if they weren't to actually sort of feed this beast. So even though they probably would never say this, in their eyes, the population must increase, the economy must grow, real estate must go up over the long term, and all of these things must happen even if it means negative results for average working people and positive results for big businesses and investors. And because of this need for perpetual economic growth, what happens if there's a major economic disaster? Well, we saw what happens when COVID happened, right? There isn't the stomach for the economy and investments to take a prolonged dive. So the Bank of Canada, as well as the Federal Reserve in the United States, print billions upon billions and billions of dollars, inflating the value of assets like stocks, real estates, and hell, even cryptocurrencies, while simultaneously destroying the lower and middle class by inflating away the value of the savings that they hold in their bank accounts. And by the way, it's the lower and middle class that often don't own assets. So even if the government thinks they're helping by doing all of this to protect the average Canadian, at the end of the day, they're just hurting them and at the very same time, enriching the people who, instead of saving cash, own assets in businesses. That's why I think the whole system needs a shakeup, one that results in the average Canadians actually building equity in the businesses that they work for, owning more things so that they can realize more of the value that they're creating and be protected from the devaluation of their dollars. But with that said, as much as I'd like to be an optimist, I don't think that this type of change is coming anytime soon. So personally, I do my best to earn as much as I possibly can, save as high of a percentage of that money as I can, and use that money to try to own more things over the long term, like stocks, real estate, and blue chip crypto like Ethereum and Bitcoin. While this won't solve the systemic perpetual growth addiction that it seems that we have across the entire world, and it won't help people that don't pay attention to this sort of stuff, the only thing that I can control is what I do to protect myself and protect my family and try to share my thinking as much as I can on these topics with folks like you. And if you find this type of information helpful in any way, make sure to subscribe to the channel to keep on seeing videos like this. So yes, it makes me mad hearing politicians and what they have to say about these issues. Whether it's the fact that their hands are forced or not, to me, it doesn't really seem like they're being honest about the situation, and their manipulation of the labor market tends to hurt more than it helps. That is, unless you are an elite big business owner. Whew, I feel like I kind of went on a rant there, but I'm curious what you think about all of this stuff. What do you think of the way that the government is handling some of these issues along with the Bank of Canada? Do you think that they're actually on the right track with their decisions? Do you think that I'm way off base with what I'm saying? Have I missed something or am I wrong? Let me know down in the comments. I read every single one and I try to get back to a bunch of them. Like I said, subscribe to the channel if you want more Canadian focused content just like this. And with all that said, thanks so much for watching. I really hope this video helped you out at least a little bit, and I'll see you next time.